Hi, this is Dan Collins, editor-in-chief of Futures Magazine for Traders Exclusive, coming to you live from the floor of the Chicago Board of Trade. Uh, we're at the end of May, and the old adage to sell in May and go away didn't hold true this year, as the S&Ps are hitting new highs. Uh, some economic numbers are good, though the first quarter GDP came in negative on the second version of it, which causes a little bit of concern. Makes you ask, what do you want to do with your investments this year? Is it time to sell and go away? It's never time to get all the way out of the market, but it's kind of interesting as we head into June that equities are at high. We just wrote about a Scottrade study of their retail customers, which said that something close to 97% are happy with their investments. Kind of counterintuitively, a lot of analysts believe when you see that huge retail activity, very, very bullish, that may be the time to get out, or at least it's a time to take caution. And as we go into the summer, it probably is time to look at some alternatives. Our June issue, which is live on online at futuresmag.com right now, we talked to Lee Partridge, who was with the Texas Retirement System. He's now Chief Investment Officer of Salient Partners. He discusses how we may be making the same mistakes that we did 6 years ago, where the markets were going so well that people got out of their alternatives and kind of had raw exposure to the stock market, which is never good. You should always have exposure so you do well, but you should have alternatives. And also in the issue, it was our grain issue. We talk about some of the interesting things going on in the grain markets in terms of old crop, new crop. And I also wrote about how ag-specific CTA programs have done very well over the last 3 years, despite the overall CTA area doing poorly. So that gives you not only diversification from traditional stock and bond investments, but the ag-based managers gave you a diversification from other alternatives. This was true because many of these managers are fundamentally focused, so they're not trading on the same kind of technical patterns as the broader diversified folks. But interesting, the numbers from the Barclay Hedge CTA Index show that those ag-based managers performed better than some of the other discretionary managers. So long-short access to the commodities, ag specifics, the grain complex, and livestock was a great investment over the last several years and a great diversification. Walking through the lobby, I ran into somebody from One Chicago. One Chicago is a single stock futures exchange. That's another alternative to kind of hedge your equity bets. So as we go into summer, it's great the market is at new highs, but you should have access to alternatives. You should be hedging your bet and explore. It should be an interesting year for the grain complex, so look at possible investments in that, and we'll talk to you soon. It's been Dan Collins for Traders Exclusive.